Gold goes on sale, stocks are inflated. Now what's ahead? Stay tuned for the full details. This is Richard with Wisdom Investor. The president said the stock market would crash if his opponent won, but instead the Dow is having its best month since 1987. But let me warn you, it's highly inflated. We're going to look at gold and where the stock market is headed the last month of 2020. The news intraday on the stock market says the Dow losses accelerate as traders give back a sum of November's gains. Let's look at the Dow Jones ETF DIA. Right now, it's having a little bit of a resistance issue around 300 on the DIA. That's around 30,000 on the Dow. It's having a hard time getting over 30,000 in the Dow. It also has support here around 290 area or 29,000 on the Dow. So if the Dow can punch below that 29,000 level, we could move lower here. So we'll keep our eyes on that. Let's look and see what's going on with the market here. This is the S&P 500 in the blue here. These red arrows are these peaks, and then we have our technical indicator above, which is the number of stocks above the 200-day moving average. When we reach these peaks and the number of stocks above the 200-day moving average, that's where we typically are due for some type of a pullback. Now, we don't know the date and the time on this, but it's definitely not the place to be going all in on stocks right now. Okay, we talked about gold being on sale. So the price of gold has dropped off of the highs around 2,080. It's now down to 1,780 area. We're hitting some support areas here. Even a drop to about 1745 could be a great buying opportunity, or where it may stop moving down. I'd like to see a little bit of a basing action before a buying opportunity, but this is going to be a good buying opportunity for those who like gold. It's on sale. Those who follow Bitcoin, it is not on sale. It did drop quite a bit here last week, but it's recovered that. It may be topping out, so we'll watch that real close. We want to catch Bitcoin at a lower point. Electric vehicle stocks are still sky high. We've got to wait for a pullback on these. Looking at the S&P 500, again, it's got resistance issues right here. Now, we did get a pop-up here on news from the virus vaccines. Any more news on those could still push the market higher, although I think it will be diminished from what we got back 2 or 3 weeks ago. If you've been in the market this whole time, you've been able to capitalize on these markets, and you're definitely building your retirement accounts. We looked at the XLE, the S&P 500 energy sector, a couple of weeks ago. Just a few days after we last looked at it, we got this pop up. It came into the resistance areas. Now, it is very possible we get a pullback here, but if we get a pullback here and support area starts holding, this could be a good place to pick up the XLE. It does have a high dividend return of 7.51% yield. Chevron also got a nice push higher, has a yield of 7.25%. Exxon Mobil yielding 10.62%. Kinder Morgan yielding 9.15%. Again, nice push off the top. Small caps have been perfect. Those of you who've taken advantage of the small caps, I know some of you have because you've told me back you were buying back in October, back in this area here. You can see this has had a nice move up. Again, a pullback, if it happens, back to 164 would be perfect, but we'll just have to see. We're going to look at margin debt here. This is the best I could get this focused in here, but the red line here is the margin debt. That means people have leveraged their money on margin, so they're highly invested in the stock market on other people's money. But we're up at these peaks here. Each time this peaks out, tends to drop. When it starts to drop, margin debt will go lower. But we're at a peak here. I can't tell you the exact day, but this is a sign or a warning. We've looked at gold. It's on sale. We also looked at some warning signs in the stock market. We could go sideways, but if we get any kind of a sell-off, it's going to be to the downside here. Market is overinflated right now. So stay tuned for more updates.